We are now live. We are live, guys. And here we are with Show Me the Money Mondays. This is brought to you by the Southwest Florida Association of Realtors. And we wanted to invite you to this special month. This month is all about the National Home Ownership Month. And I couldn't think of a better way to kick off this month with you and with our partners. So one of our ally partners is here, and he's going to bring to you the knowledge, the expertise that he has to offer as far as his mortgage lending company. And our ally partner is Charlie Bucklin, and he is going to kick us off with our Show Us the Money Mondays. How are you, Charlie?
I'm good. How are you?
I'm doing very, very well. Very blessed to be here today and to be able to be here also with you guys on our social media platforms. Now, while you're here, if you guys have any questions, please put it in the chat below. So then that way Charlie can be able to answer them. If not today, maybe another day. But the great thing is we can be able to communicate back and forth. So let's go ahead and get this kicked off. My name is Q Raphael, and I am the president for the Southwest Florida Association of Realtors, and I have the honor to be able to kick this off, and I look forward to many more Mondays of bringing you all more information on how you, as real estate agent, can be able to get the knowledge and also save money. And also, if you are someone who is looking to find out more about mortgages, then you want to go ahead and reach out to Charlie so that way he can be able to show you the pathway to home ownership. So without further ado, Charlie, let's go ahead right into it. Tell us a little bit about yourself.
My office is in Port Charlotte, Florida, but we travel if we need to travel. We go wherever it takes, do whatever it takes to get the deals done on time. And just, I want everybody to be as happy as they possibly can be with the outcome of what it is we're trying to accomplish, whether that's, a large down payment, a low down payment, a conventional loan, a USDA loan, an FHA loan, whatever the case may be. I just want everybody to be happy because my sole business is based on referrals. So I don't, I do a little advertising here and there, but the majority of it is referrals and people that I'm friends with telling somebody, hey, you should give Charlie a call if you need some help. That's pretty much been my business model since I started in 2005 as a broker.
Okay, that's what I was going to ask you. How long have you been in the business?
Yeah, I started as a broker in 2005, and then we won't get into 2008 and 9 too much here. Let's stay positive. But I went to a bank for about 6 years, and then I was at the bank till 2016, and then I was like, you know what, it's time to get back to the way it used to be, and go back to being a broker. So that's what I did.
All right, awesome sauce. So you come with a lot of experience throughout the changes in the markets that we've had in the past, which is going to bring us up to today. Let's talk a little bit about rate history. Can you shed a little bit of light in regards to what has been the national average interest rate, and then what is the rates for today?
National average since 1971 is 7.74%. And when, if I was speaking to my father about rates or whatever, you say, well, when I bought my house, it was 12, 15 or whatever, and they're going to be going into double digit rates. So we've been blessed and maybe spoiled even to get into those lower 2s and 3s and 4s that we had. Now, all of a sudden we're back into 7 3/8 right now is probably where I'm at conventional. Now I'm a little bit lower than retail because as a broker, the lenders aren't paying my lease. They're not paying my health insurance. They're not paying my electric. They're not paying anything that has to do with anything. So that's how I have wholesale rates as a broker because they're not paying my bills. So
I'm sorry. I hate to stop you right there. Just so everyone can be on the same page, what is the difference between a mortgage broker and someone that's going to a traditional bank to get a loan?
As a broker, we're all individually licensed. And then when you're at a bank, you can just be registered federally. So you do whatever continuing education they put in front of you, but you're not going through, I don't know how I mean, it's not easy, but it's not, we're not doing brain surgery here either. So it's somewhere in the middle. It's difficult. You got to pass the test on a national level, and you got to take the course, and you got to take the continuing education. You got to keep your license up to date. For me as a broker owner, I have certi bonds. I'm need to maintain a certain amount of funds in my business so that I can continue to run. They want to make sure that I have good credit myself, even so my credit's checked regularly. They do a lot more with me here than they did when I was at the bank. When I was at the bank, I just had to keep producing and showing up, and it didn't really matter what it was. And then also as a broker, it's very transparent. So with the bank, they can charge and really do whatever they want, and that's not disclosed. So I think that's another reason that the retail rates are higher than what we have here for me with wholesale, because every single penny is going to be accounted for on your settlement statement. You're going to know exactly what it is. And I really feel like it's just a lot more transparent.
So what I'm hearing is a mortgage broker is a little bit more educated. And what I mean by that is that you have to take more courses and you have to stay on top of things. And then your rates are typically lower than a traditional lender. Is that what I'm hearing?
Absolutely. Yeah. And so right now for my conventional, I'm probably at about a 7.375, and it gets tiered too. So if somebody's a first time home buyer and they are not making greater than 80% of the area median income, they could qualify for a program that's probably about 6.99 right now. So conventional isn't just conventional. We have conventional for first time buyers, and then we have conventional for people that aren't first time home buyers but are still under that threshold for higher income. And then if you have the highest income, or if you're over that threshold, then today it's about 7.375. And then if you're under the income limit, you'd be at about 6.99. And then the government loans today, FHA, VA, USDA, those are probably about 6.5 with me.
Okay.
And,
Okay.
and then I'm talking no points. So once we start getting into buying down the rates and stuff like that, we're having a different conversation that goes even further.
Okay. All right. So I know you ran off the type of loans that you all offer, but for those who are just getting into the market, whose first time home buyer want to understand what type of loan products you offer and what is the slight difference between them?
If you're going to do any of the typical conventional FHA, USDA, VA, all of these are what we call full documentation, where you're going to show, if you're employed, you're going to show 2 years W-2s, current pay stubs, bank statements to show that you have the money for your down payment. Or if you're going to have a gift coming, we're going to have to evidence where the funds came for that gift. And then that's kind of your standard. We'll just say the standard full documentation loan, where you're showing your income and you're showing everything. Then once you get into the self-employed standard, where you're going to show that documentation, is we're only using federal tax returns. And in Florida, you don't have a state tax return, but we're only using federal no matter what state you're in, if somebody else is outside of Florida. But you're going to have to show all of the schedules. So if you have a Schedule C, a Schedule E, or anything like that, and then if you have business tax returns, which are 1120s, those start going in there, and you need the K1s, or you need your 1099s, and then we start getting into what you're going to be able to write off and what you cannot write off. So like, for instance, and this is just a quick thing, if you have depreciation in your income in your business, we can add that money back in. But if you have expenses like materials, supplies, rent, things like that, and you're writing that stuff off, or your equipment, whatever, and you're writing that stuff off, you can't add that back in. And then that actually gets netted from your adjusted gross income on your federal tax return. And then there's a couple things we can add back in, but for the most part, it's pretty much what ends up being what your personal income is on your 1040, which is your personal tax return. Now, if you get into other programs that are even more creative, we'll call it, we have what's called non-QM loans. And in the non-QM environment, we're qualifying people on bank statements. And I even have two lenders that with a good enough down payment, they're going to not make you show any income, and you need about 20 or 25% down. But those are a little more costly because they're not verifying your income. That's a more risky loan for the investor. But the non-QMs, those are the bank statement loans, or we can even use like a 1099 or a profit and loss and qualify you based on those.
Okay. So you said a lot. And the great thing is this is recorded, so they can always go back to be able to understand a little bit more in depth and find out where they fall into place. Now, for the first-time home buyers, so some numbers came across my desk back when we were doing the Realtist Week back in April. And that was over 2 million Black home renters in America, over 2 million, is home ready, but they don't know the right steps. And they believe that their down payment is way more than 20%, or they think they have to come up with 20%. Tell us what is required for a down payment for first-time home buyers.
I have a program right now that's huge. It's a they call it a 0% down. Now, the again, there's going to be different points where these things max out. This program is a 95 or a 97% loan to value program, and if that home is under 500,000, they get a deferred second mortgage that has zero payments, zero interest, that does not need to be paid until one of two things happens: the home gets refinanced or sold. So if you refinance or sell, you got to pay the money back, and you get $15,000 towards a $500,000 purchase. That doesn't mean you can't buy a $600,000 house. That just means the maximum they're going to allow you for this second mortgage that I refer to is going to be 15 grand. And then the other side of that is if you start moving down to 400,000, then you'll get $12,000, 300,000, you get $9,000. They're essentially giving you a 3% second mortgage with zero payments, zero interest, and it's just deferred until you sell or refinance. Now, I have other programs too that would be a conventional program. But with the FHA, I have an FHA 100 that'll give you a second mortgage that you can either do it with a deferred payment or you can do it with payments. You start out right from the beginning and you're making payments on the second mortgage and the first mortgage. So in answer to your question, I'm sorry I took the long way there. You can get in with the 100% financing. It's just once you start putting down more money, you get somewhat better of a deal. So, you always, if you can come with 5-10% down, it will always be better than just coming with 3%. But the point is, if we looked at the trajectory of how real estate's appreciated over the last 50 years and you got in with no money down, hey, at least just get in. And then next thing you know, if that house is going to appreciate, you could do a refinance later. And I don't really like to say that. I don't like to tell anybody, oh, don't worry, we can just refinance later, because that's sort of just like that, marry the house, date the rate, whatever. I don't really want to get anybody into anything that 12 months later they're gonna be like, well, that guy told me I could refinance anytime. No, that's not how I'm. I want to be more transparent. I want to tell people, hey, you need to be prepared that if values went down, which they're not over the last 50 years, they've gone up. But if they did go down and you actually had to pay this mortgage, you need to be comfortable paying this mortgage for the time that you signed up for it. And, think about that. And then if we're blessed enough to the point where we can get some equity and get this thing refinanced and get you in a better situation down the road, then, awesome. But, be prepared to make the payment that you're signing up for is the main point of what I try to say when we get into those talks.
Right, absolutely. And I hear a lot of realtors use that term, um, mirror the house and date the rate. You can
Correct.
refinance, you know, and that is true, but exactly when can you refinance?
Yeah, I
And
don't want it to sound too simplistic.
right, right. So I never say that. But you know, it's not about what I say. It's all about what's best for the client. And so I'm glad that it's not something that you tell your customers as well.
I mean,
Um,
I believe it, but I don't want to just make it sound like, oh, don't worry, we got you. You'll refinance next week. No,
because the thing is, we don't know the future.
correct.
Things happen. COVID, for an example,
Yeah,
you
it
know,
happens.
two,
Yes.
2008, 9, 10. So things happen in the market. So just be able to afford what you can afford, because at the end of the day, you really have married your mortgage rate or your mortgage payment. I would say that, because however long your terms are, I don't see that person really been in that house for that many years, 30 years or whatever else. So anyhow, moving on. So you talked about points. Exactly what are points?
Okay, so if you're going to pay points on a loan, you're only paying, yeah, 1 point is 1%. So 2 points would be 2%. 3 points would be 3%. But if you bought a $500,000 house and you put down 50 grand on it, you're only going to pay 1% on 450,000, not on the whole 500,000. So a point is based on a percentage of whatever the mortgage amount is that you finance. Now, in, I guess basic reasoning, you would think that for every point you spend, or every 1% you'd spend, you'd lower the rate by 1%. It doesn't work like that. It's more of the lower the rate you go, the more points it's going to cost. And then to go, like, let's say we're talking to a customer right now that was at that 7%. You probably would end up spending, a couple to a few points to get all the way to 6%. So when people are purchasing a home, one thing I tell them when we do this is, I don't want to see you spend so much money that if you spent 2 or 3 points to get the rate down from 7 to, let's say, 5.5%, and then next thing you know, the mortgage rates start coming down, and you could have refinanced in 18 months or 24 months, and you'd be upset that you spent 3 points when you could have, like, maybe held out or waited to refinance instead of spending it all up front. But there's another school of thought that I would adapt, would say, maybe spend 1.5 points, because I know you want to get the rate down a little lower or whatever it is you want to do. Just don't spend so much money on points that you're going to feel like you spent good money after bad money to buy down the rate when we could refinance later. But they keep telling us that these rates are coming down, but they're not. Lately they have. I'm not saying they never are, because I don't know, but what keeps happening is they're hinging the lower rates coming on inflation cooling off or going down, and inflation hasn't gone down, and they kind of, I feel like Lucy, or when Charlie Brown tries to kick the ball and she keeps pulling the ball. That's how I feel right now.
And I totally understand, because they've been speaking about that for a while now.
Yeah,
So
but what you could do is a buy down, and a buy down would be a 2-1 buy down or a 3-2-1 buy down, and that's a good option for the people that have listings that aren't selling and they don't really want to reduce the purchase price. If the seller did a concession where they say, okay, the price is going to be, we've been on 500,000, let's just hang out there. The price stays 500,000, but we can provide you a seller paid 2-1 buy down. So the first year your mortgage is 2% lower, and then the second year it's 1% lower, and then the third year through, the rest of the 30, it's fixed for what it is. Maybe a temporary buy down paid for by the seller would help move that listing,
hmm hmm
which is
so
just
so
more tacky.
Yes, it is. It is more attractive. And I believe it's a win-win situation for all parties. So with that said, when we're talking about sellers now, let's jump right into it because we have a few minutes left. Let's jump right into the changes that is happening. Here, we're going to speak on the state of Florida. Here in the state of Florida, when it comes to buyers now, may they're positioned to coming to the table with more money to pay their buyer representation. Um, is that something that you are seeing now that is affecting any of the loans? What is your perspective on what's going on with the changes with buyers and sellers?
With everything that I have been doing, I haven't seen it really affect it either way. Although I have seen, and this has been since some agents have always sort of done this. So normally it's been like, the seller will pay 2.5 or 3% to the buyer side, or maybe even two. And that agent says that they want, three, or they want 2.5, and the seller's only paying for two. And then the buyer ends up paying the agent additional funds to compensate them for their services, which is fine. We can do that. That's no problem. It works like that. What but it hasn't gotten to the point where it's really been a problem for me so far. And I think that that's going to work itself out, because I think if you have a savvy buyer that, or not even, just a frugal, financially conscious buyer that's going to say, okay, I can buy this house or I can buy this house, and this house is going to cost me more money because that seller isn't going to pay my agent. And my agent did their job, they deserve their money. Why don't I buy this house because I bring less money? It's going to come down to, you know, dollars and cents to me. And I think that it now, unless that buyer says, I want this house no matter what, I don't care what it costs, then that's going to be more costly for that buyer. But I think once that they start, actually imposing it and the removing the commission percentage from the MLS, and they start taking that stuff away, once the agent, or once the buyers start calculating, at some point that's got to be transparent, right? So the buyer's going to say, okay, well, what's it going to cost me to buy this house? What's it going to cost me to buy this house? And then that's going to force people to ask the listing side, like, hey, are you paying buyer agent comp? And if they are, then how much? Or if they're not, then okay, sorry, we had a buyer, he could have bought this house, but he just didn't have enough money to bridge the gap. And then maybe that's when the conversation steers towards, okay, well, what's he need? How much are you charging? And is it going to be uncomfortable? Is it going to be awkward up front? I think so. But I think once these sellers start having, additional 30, 60, 90, 120 days on the market because they're refusing to pay buyer agent comp, then maybe,
Yes, that
maybe
is
it'll
true.
fix it. Yeah.
And that is true to a certain degree, depending on the loan products that
Right.
that buyer is approved for. So these changes, as of right now, from what I've seen or what I'm hearing, and what I do know is that it's going to squeeze out some of those buyers who are approved for FHA and not approved for conventional.
Correct.
So that is where some changes really need to happen. Um, VA, so far, we know there's a temporary allowance for that. So I just wanted to hear from you. What was your perspective? What's going on your end as of right now? That is, if you are seeing some of this, me as a real estate agent, we are seeing some of the changes of commission put into the MLS for those who creative ways to be able to do so. So with that said, our last uh, question, our last question for today is there anything that you are doing that are saving either realtors, members money, or and maybe their buyers. Is there anything special that your company?
Right. Okay, my internet I think got spotty. Did you lose me for a second?
It was just a little frozen there.
Oh, okay. I heard the majority of the question. As of right now, every time I close on something, I send my buyer a cutting board from me and the agent, whoever the agent is that I worked with, and then I say from me and Q or whatever. And also we are I can do one of two things as well. I can reimburse the appraisal or pay for a home warranty up to 695 if the person wanted the home warranty. I can certainly do that as well. And I am very, very tuned into the down payment assistance programs too. So in Florida, we're working on one right now. Well, Hometown Heroes is supposed to have their money come July, but
July.
there's other ones as well that I have access to. So I think there's like four or five of them specifically. Right now, I'm working on one. It's called Florida Assist. It's a bond program where these buyers can get $10,000, and then there's three or four more behind it. But that's the most attractive because that's similar to the 0% one that I told you about too. But it's issued through Florida, and they can use that for an FHA loan or whatever. But they're gonna have income requirements or restrictions on that loan. But the one that I told you about earlier, as long as they're a first time home buyer, doesn't have any income restrictions.
Okay.
So I got a lot of different stuff. You just got to call me and we'll get it all worked out.
Yeah, or guess what? We might just jump on another one of these here and break down maybe like three, highlight three, and then we'll come back with another.
That's
So,
fine.
yep. So anyhow, thank you so much. You have given us a wealth of knowledge. You all now have a good insight of Charlie's experience. Below is their website, his contact information. So if you are a real estate agent or a realtist or a buyer and you want to be able to get in contact with them and you want to know, you have more questions or whatever else, please do so. If this is your first time being introduced to NAREB, which is the National Association of Real Estate Brokers, we would love to have that conversation with you and bring you into our circle so that way you can understand our mission, our vision, and that is democracy in housing. So my mission is to ensure that everyone has equal opportunity for housing, for loans, and we want to bridge that gap to home ownership. So thank you so much. Once again, my name is Q Raphael. Thank you, Charlie and Advanced Mortgage for being here and being an ally part. You guys, we want to see you back next week for Back It Up, Show Me the Money Mondays. And we
All
look
right.
forward to seeing you all once
Thank
again.
you for having me.
Have a beautiful week. And the other thing I failed to mention is join us June 27th for our Pathway to Home Ownership. This is one of our ways that we're giving back to the community and we are educating them. For that, we are doing a home buyer program or a home buyer workshop, and Charlie is going to be there also talking about loans and how you can get into your home. So put that down. It will also be in our Facebook and our YouTube as well. All right, guys, have a great week and bye-bye for now.